What's going on, everyone? Welcome back. We're here again for another video, and I thought that I would break down today the NASDAQ sells that took place in the AM session of New York. This is an example using ICT's market maker sell model and quarterly theory by Trader Day on Twitter. And before we get into the video, I want to talk to you guys a little bit about the prop firm that I've been using for quite some time.
If you're looking for a prop firm to trade with, I would recommend Bespoke Funding Program. A prop firm with no time limit, extremely tight spreads, and a safe trading environment with next to zero slippage, I honestly don't think you could go wrong. Bespoke also has a 24-hour working support team that can answer any of your questions and concerns whenever need be. They also have a section on Discord with proof of payouts with the many traders that have made those accomplishments. And so far, my experience with Bespoke has been nothing but satisfaction compared to the many prop firms I have traded with in the past, and I will be with them definitely for the long run. In the description of this video, there will be a link to sign up for any account challenge, and if you use code SNIPER, you will receive 50% off any purchase.
So starting off, we're going to be looking at NASDAQ and the S&P 500 on our daily chart. And the first thing that we want to recognize here is that we are in clear and obvious bearish order flow. You can see that since the start of quarter four on October 2nd, we have still been trending lower towards sell side liquidity pools. Now, what I wanted to focus on is actually this small area of price, this daily bearish volume imbalance, and we're going to zoom in on that. Now, what can we see here? What we can see is the daily candles of the S&P 500 and the NASDAQ, that the bodies of the candles are staying inside of the PD array. So we're acting and treating it as resistance. So as we're staying in bearish order flow, I'm still going to continuously look for sell side delivery and any sort of sells that come about. But in order to capitalize on any move in particular, we need to use the economic calendar as our news driver, which provides volatility injections into the market. So understanding that this week is FOMC press conference and non-farm payroll, I am understanding that this week will most likely be a low probability trading week because we have two massive economic calendar high impact news driver events. So I am anticipating opportunity to be very scarce in regards to seeking high probability setups. So when I'm going to be looking for any opportunity, my exits will always be low hanging fruit objective points, and I will not be looking for large external range liquidity pools. So today we had news at 8:30 in the morning, which was employment cost index quarter by quarter. And we had CB consumer confidence at 10 a.m. But I'm going to focus on the 8:30 a.m. news driver. So moving on to our hourly chart on the S&P 500 and the NASDAQ. I have marked off the volume imbalance on the daily here for the S&P 500, and the volume imbalance is here on the daily for the NASDAQ. And as you can see, we are inside of that higher time frame PD array on the NASDAQ, but we are not inside of it on the S&P 500. But I also noticed something, that the S&P 500 is making a higher high compared to the NASDAQ, which is making a lower high. So my first indication right now is I see that there is already weakness in the NASDAQ. So the market's tipping its hand to us, showing that the NASDAQ is weaker and the weakest asset compared to the S&P. So automatically I know that we're inside of a higher time frame PD array, and the hourly chart is showing SMT divergence inside of that higher time frame PD array. So if I'm going to look for a short, my focus will be on the NASDAQ. So only looking at the NASDAQ right now on our hourly chart, I am going to look and note any obvious liquidity pools that I can target. And my first draw and what my eyes are looking at is London lows, which will be our target for sell side delivery. Now moving down to our 5-minute chart, because we're doing time frame alignment, daily to 1 hour to the 5-minute chart, I have labeled off the news driver that took place at 8:30 in the morning. And the news driver that took place was what created our displacement lower at 8:30 a.m. when we were in our manipulation phase of the 90-minute cycles of Day's quarterly theory. But another thing that I did note was the Dow index that I have rested right here. Notice how it's continuously making lower lows here, but the NASDAQ is continuously making higher highs in quarter 2 of Day's quarterly theory. So price ran Q1's highs and then displaced lower on our news driver at 8:30. So we're stacking up as many confluences as we possibly can to give us that confirmation and that confidence to have the bias short 2-hour sell side liquidity pool target of London lows while also being in our higher time frame PDRA. Now, what I'm going to be looking for here is price to provide a short entry at 9 o'clock during the start of Q3 distribution. And as you can see here, as price broke structure, we had our news driver, we had SMT at the highs with YM here, and we had SMT at the highs with ES here, while inside of our higher time frame PDRA, the daily volume imbalance, we had a retracement into premium of this M5 swing, tagging the last down close candle of the manipulation leg move, creating a bearish breaker block, which provided us our entry at exactly 9 o'clock. Now, I put my entry at the breaker block and I put my stop loss at the stop hunt high that happened during Q2. And I'm comfortable with this being my stop loss because it was a stop hunt that happened during Q2's manipulation, provided displacement, and retracing into premium of that M5 swing, with also the stacked confluences of SMT with YM and SMT with ES at the highs inside of that higher time frame PDRA. And the result was simple and smooth. As price retraced up into the breaker block, it respected, and then 9:30 equities open provided a slight Judas swing up, retagging the breaker block, reaching into premium of that M5 swing, and then provided us speed lower. And as you could see, this M5 bearish order block, the mean threshold was respected by the candle bodies, and we delivered us right down to sell side liquidity pool, London lows, all during the quarter 3 of the 90-minute quarterly theory cycles. And I have a live stream recording of us in my Discord catching this live and calling it out, watching it step by step. NQ's dropping from the breaker, which is nice.
I just hope we drop from here and then maybe get like a second leg of distribution somewhere.
Yeah. I would expect that like during equities open. And then the 10 o'clock news like continues it.
Yeah, that's something. I think it ran it all the way up here, and now it's gonna come down. It's looking like a London swing to New York Open, so like a SMT at the highs as well. So if we do break lower, I don't see why we can't hit London lows today.
I would like to see this hourly gap get traded into at a minimum for ES or NQ. And if we could trade through it and close below it, then we'll have the London lows as I draw. NASDAQ was the one too short, but we had the hourly SMT at the highs, M5 stop run, displacement lower, and then we have with distribution occurring at 9 o'clock during our 90-minute quarterly cycle. Turtle soup happening during manipulation. Partial being at 14,380. Nice. If NQ can get right below this and close that 5-minute gap off, that'd be so nice. There we go. Okay, we reached the hourly gap. Just, 2 standard deviations smoked.
Yeah, as soon as it gets there, bro, I am taking a lot off.
Nasdaq was the one to short.
Let's go. Oh, my bad. What's up here?
Into the new week overlay app. Good trade. Good trade. I took everything out of 2.5 standard deviation.
And now I don't care about anything else happening for the rest of the week. That's cool.
Oh yeah, no, that was the
That's
main.
it.
It wasn't the fact of taking a winning trade. It was taking the fucking trade and being fucking done with this week.
Yeah, I know. That makes me feel so much better.
Yeah, I knew there was gonna be another entry past that the original one you had. I knew 930 was gonna do something.
It was in perfect alignment with quarterly theory too.
Come on, London lows, London lows, London lows.
And boom.
Hello.
Okay. We'll call it at that.